Yo. Morning, everyone. Hope you guys are doing well. Today we're looking at NASDAQ. I didn't post a daily bias out today, but for right now I'm bullish. Just coming into the week, pretty bullish week. Still got all-time highs we're reaching for, so as long as there's no indication to me that we want to drop heavily, then I'm going to be bullish. Yeah, if we're bearish, if I need to flip, I'll flip, but as of right now, it doesn't really look like I need to. Nice run on stops there, forming an SMT at the bottom. Yep, SMT at the bottom. So we got 8:30 news today. Forex Factory, you can pull that up. We got 10 a.m. orange folder, so nothing really huge there. And then tomorrow we've got 8:30 and 10 a.m. same agenda from today. I was pretty busy yesterday, so I was not able to do a market review yesterday, nor was I really able to answer any DMs or even look at this Discord. So I had to just take care of some things in real life. So I'll try and catch up today with all of that. I should be, I don't get too many, only about like 30 today. So I could probably answer all those today. And then catch up on anything that I missed from the chat, any questions or anything like that. And then either at the end of today, or at the end of the stream, we'll do a little review from yesterday. But I posted that market review from Tuesday up in the YouTube vid section if you want to go back in and watch that. But nice drop down run stops here at 9:30. We had 8:30 news today, as seen over here with the volatility. Could be waiting for a pretty simple macro time, or try and get in here, which was this 8:30 on the dot. Okay, nice. Trying to get back into the groove of things because Tuesday, Wednesday was pretty lazy, I think. Like you can kind of just, the way you approach Powell is pretty simple. Last ditch macro every single time. You can look at it on Wednesday. I said it on the market review on Tuesday. Look for that tomorrow. It's standard protocol. That's why I thought the Tuesday price action was actually phenomenal, because it's doing exactly what it should be. Same thing with Wednesday's price action. It was just bearish instead of bullish. But look at what time it's leaving the consolidation on both those days. Happens to be 10:50 right on the dot. So both those days you really can, at least for me, I'm only coming to the charts about 10 minutes before, finding a bias, and then executing to the last ditch macro. I don't really care what goes on in between then. So back into the real flow of things today. Excuse me. Actually looking at proper price action, proper bias, but on the higher time frame charts, it's definitely a little weird. Daily chart obviously is healthy. We're going back up. We got the daily imbalance down here. But yesterday dropping back down into the range, leaving this relative equal lows, which there should be SMT there. Yep. And then displacing, not really through the order block. It does take out the order block high and the wick high. Inefficiencies in discount here on the 4-hour chart. Not in discount, but discount relative to the price of where we opened up right at 9:30. And then on the 1-hour chart, you have this inefficiency as well. And then this gap down here paired with this bullish order block. Now, obviously, we're dropping pretty heavily coming into the open. So, and even if you look at this right now, this is pretty visual low resistance liquidity signature. Even on the 15-minute chart, you can see it pretty cleanly there, right? All this juicy sell side liquidity building up right into the open. So I'm looking for SMT at the highs, which we really don't have on the 1-hour chart. Like I see this, but YM is just actually trading up right now. So there was no previous day high SMT. It's pretty weak SMT at the highs on ES and NASDAQ. Like you can kind of argue, not really. Right. So I'd have to see more and more confirmations that we want to flip bearish for me than I would have to be for bullish. We have a bunch of liquidity targets down here, so I would have no problem in flipping. But just because we're dropping down here, trading through this imbalance, to me, it's not a huge deal. I just want to see how we're going to react around London low. If we're obviously holding these efficiencies, and here's your first presentation gap. Let me start dropping more, then into the macro time, we'll look for something. I'm perfectly fine with taking an entry now. Really, anytime now between 10:10 and 9:30 on an 8:30 news day is typically pretty good. You can trust 9:30 entries. You can trust kind of those Judas swings, because typically on an 8:30 news day, you don't have like a 9:30 double Judas or some sort of weird movement at 9:30. It's pretty predictable for the most part. So if you have a good bias, getting in right at 9:30, getting good in even right at earliest as you can during the macro time is best, because anyone who's trading strictly 950 macro, a lot of times this can be, especially if 8:30 moved, this can really be the last ditch macro effort, or like, I guess, the last good entry when you're trading an 8:30 news day, because if 8:30 news moves, 9:30 is moving, 10 a.m. is going to be the last entry point, and then sometimes between like late in 950 into silver bullet, the first half of silver bullet will be moving. I mean, not really, you don't see a lot of entries, and then the latter part of silver bullet will be consolidating. Or you flip that, it goes entry during 950, consolidates during the first 30 minutes, and then it moves at the end. So really the last good opportunity that I see on any 8:30 news day is 950 macro. You can squeeze maybe a silver bullet in there if you wanted to, but as you get further and further away from the start of this engine here, you're going to have less and less liquidity, and you're going to be more likely to be in a consolidation range. In here, as you can see, it starts the move, right? You have this spike of volatility. Okay, now it's starting this kind of engine. And now we have some consolidation here, starts it again. So if you think about this as like, how much gas are we going to have? If you see 8:30 to 9:50 having this huge move, especially if like London is the high, you're expecting like an earlier draw on time. Anyways, so you can see we're using right in here. This is important to me. As we trade back up into this range, we're touching the bottom portion of that hourly imbalance, trading back up, closing back within it. Same thing here, touching the 75%. I want to see it, obviously, if I'm bullish still, close through the first presentation gap. We just touched the wick of the order block there. But I'm being patient today. Yeah, I've been scalpy really the entire week. Monday, I don't even remember Monday's price action. What was Monday's price action? What the heck? Did anyone see that? What the heck was that? That was so weird. I don't know if anyone saw it. Maybe my recording picked it up. I don't remember Monday's price action. Let me go back and see. Oh, okay. Well, I traded Asian on this. All right, yeah. So I've been pretty scalpy this entire week. Monday scalp, Tuesday scalp, Wednesday I lost, and then took another trade off of flipping bias, which was like a scalp, and that put me it was still in the red, put me back closer to break even, but still a red day. So today and tomorrow were really the main targets for me to try and get a good trade, like a low to high of session, something like that. If it doesn't offer to me, that's perfect, but nothing huge from me, really just taking what's offered and leaving it. I'm still kind of in this consolidation range protocol. I know we're leaving the consolidation, so I'm trying to slowly adjust out of that. See the candle bodies there, respecting first presentation gap almost perfectly. I'm checking over here at YM because, so I don't really talk about this a lot, but like there is a process that I collect information subconsciously, right? And you have this too. Any good trader has this, where I'll see something in the market that sometimes I don't even notice, even on stream or not on stream, and then I'll immediately, my brain will go, okay, I want to see how this pairs to this piece of information. And I don't really explain that a lot because it's automatic to me. But as I try and catch it more and more, I try and explain it. But like for here, in this scenario, okay, it just filled the gap. It respected it, touched the order block there, dropped down, took out that low. Bearish indication. So immediately my mind went to check for SMT. And I'm not going to check for SMT here. I want to see if it's here and here because I want to start seeing, can I start building a bearish bias? So as soon as I see this, okay, this is a confirmation of a bearish price action and potentially bearish order flow. My eyes go up to here, and then I'm subconsciously pulling up this chart to see on the 15-minute chart, is there SMT at those highs? Which YM is still trading up here. But that's just an important, I guess it's not even something that, if you don't do it, it's not a major thing. But I'm just saying, if you're struggling on how do you gather information, the first 15, 20 minutes for me is I'm just absorbing as much as I can coming into the trade. Sometimes I don't need to do that long, but especially if I'm using the macro time as my entry, those first 20 minutes are going to be as much, I'm going to absorb as much information as I can that's offered to me. So if I was wrong, I want to go in, look for SMT at the highs, especially on a 1 hour chart. In here, you don't really see anything that's super strong, so I can't really use that. Then I'm going to go to the 5-minute order flow. So I'm looking at the 5-minute order flow. What do we see in here? Still pretty bearish. You got this roll on stops there inside of a gap. Let's see if that's a 15-minute gap, and it is. Okay. So we just went from 15-minute premium IRL to sell side. And you can see the candle bodies there holding the 1 hour gap. So you got pointers in both directions, which is why if you got pointers in both directions, 50-50, what do? Sit on your hands. You stay patient. And someone may have a really strong bias for today. I'm still bullish for today, so I'm still looking for longs and I favor longs. But I'm being very patient. And you could just see that candle right there, just literally. There's a lot of volatility today. Something going on? There's something going on, right? Trump's not speaking or something. Saw this in Iran news. Who cares? Respectfully. Yeah, I don't know. There's no news. It's just weird volatility coming in. A little weird. But both of this candle here and this candle here were both that weird spike downwards. Let me look at this consolidation. 4 minutes till macro time. And look, this is 5 seconds. Drops that quick. Even a 1 second chart. Yeah, they see. Just this boom. It's time to start trading Asian session. NYAM has been rough for a while. I actually traded Asian on Monday, back inside the New Week opening gap. That was the first one I did in a while. But yeah, I don't know what's going on. This is probably some of the worst like late spring into summer PA that I've seen, like this consolidation range. I mean, it's not bad, but it's just odd. Which I guess you're never going to have repeating price action. But so 5-minute order flow is still bearish. 1-minute order flow is still holding that as well. Coming into the macro time, if we displace and drop past this swing low, form an inefficiency, trade back up into it. I'm tempted to take that as a shorting opportunity down to, let's see, I don't even know. We got one here. We got one here. I think that one a little bit better. It's down to Asian. You got London PM session low down there too. But like I said, I still have a hard time arguing bearish price action, even though when you look at this, there's no breakaway gaps, first of all, from 9:30 till now, right? You got this drop here, which was used 1, 2, 3, 4, 5 times before it left. Touching the order block, of course, so candle buyers are telling the story. It's respecting this inefficiency for sure. But it's not leaving any breakaway gaps. It's using this as reclaimed. Anytime we use a gap that's reclaimed, it's already kind of weaker in that obviously in how strong it is. The best reaction you want is when it just wicks into it and leaves. So this kind of reclaimed here, no breakaway gaps being left. I would have loved a breakaway gap here or even here. So it's very high resistance coming down. You can see now all of this. To me, my eyes goes to this, just like how we had all this sell side resting in here. My eye goes to, okay, anyone right now who shorted 8:30 news is profitable. Anyone who shorted 9:30 is profitable. And you got all these relative equal highs with no SMT, between ES and NASDAQ. And ES is, ew, what the? This is when anyone says barcode, this is what that means. And normally you can tell pretty easily on ES if it's barcoding or not. When it's barcoding, simple rule of thumb, wait for opening range. Let opening range play out, be done with it. Once it's after the first 30 minutes, if it hasn't cleaned up by then, you sit out. But you wait, watch. NASDAQ is a lot of times it's more tempting because there's higher ranges and the candles are thicker compared to ES, right? This is not nearly as tempting as NASDAQ is. NASDAQ will also move quicker. The ES 15-minute chart, let's take a look. Yeah, I don't know what that is. Got the 5-minute chart. I'm gonna switch that over. 1 hour chart, we're just dropping back down into that inefficiency and discount from 2300. You got the bullish order block there on the 1 hour chart at 2100. I mean, it's bearish coming into it, but it's very weird bearish. Look at the 15-minute chart on NASDAQ. Right in here. Right? Coming up, wicking into this, dropping down. Now you got this. Obviously, if this closes below that wick, it's a very strong algorithmic signature. But now on the 1 hour chart, or even the 1 minute chart, rather, there's no gaps. Yep, it's just an RTH gap fill, exactly. Need some good price action, man. We got some good one on Monday. And that recording is also up, if you haven't seen that. We got some good 15-second tape reading in. All right, now you got an inefficiency. I mean, it's whatever. A little tiny gap there. I don't like it. Just watch it. Let me screenshot this really quickly, put it in predictions chat. you go. All right. Starting to look a little better. ICT the lows. 1 minute chart, especially if you can close through this with displacement. I like that. This little clump in here is the problem I have. There's no short-term high or anything till this. So you need to shift. In this case, like anyone who's new, you probably don't know this. Anyone who's kind of intermediate or onwards, you probably know this by now. But anytime you're looking for a market structure shift or change in state delivery, you prefer to see it on the left side of the chart. That's like the clearest one. You could also use any market structure shift on the right side of the chart, right? The right side of the curve. When I say the right side, I mean anything beyond the smart money reversal. So in this case, if the shift would be all the way up here, you can use that one. There's nothing wrong with that. But I would have no problem in it coming back down, forming short-term high and then displacing up through there. That would also be a shift in market structure, right? You're looking for the market structure shift in the SysD is not a pattern, but rather an indication. So you can see that indication in multiple different ways for it to be true, right? Change in the state of delivery. Sometimes we forget the names, but the names actually have meaning. Change in the state of delivery. Market structure shift, shifting between a buy program and a sell program. Same thing with the SysD. This is exactly why I was hesitant coming into this little inefficiency here. Nice displacement through the range. 5 minute chart. If you get a 5 minute SysD, in this case, you wouldn't even need the shift. You just need a closure above, or even a tap above this candle here. It's probably the Vantix model in play cooking right now, right? But I'm going to be patient. Current daily buy side is up here. CDH. This is that 1 hour gap. Now it's pretty filled. Like if you look over here, this candle range is all efficient. This is all efficient. 5 minute chart, same thing in here. This is the time frame that's actually paired with the 1 hour. So when you look at this, it's pretty efficient. You do cut through candles. I'm not going to deny that. But I would not need to see it come into here, bounce into here, drop back down, bounce into here, drop back down. It just wants to, it should just flush right through. And if it wants to now respect the first presentation gap, that's the PDR I want to see create some sort of discount retracement. But this gray shaded area shouldn't. I want it to come up, really trade up to here. The wicks are going to be inefficient of this gap. So if it wants to come through, tag this, then drop back into discount, offer an inefficiency, that's fine. But the gray box should not do something like this again. Okay. So now if it wants to come down just a little bit, touch into the gray box, that's fine. But it's doing it so far. And if it doesn't, obviously and it displaces through, that's fine. But at this point, this is where I would expect for a macro entry to happen. Tag into a premium array. Here's your 5 minute SysD. Right? And this section of the inefficiency from here to there is the inefficient portion. We got multiple wicks through it, so you could, on a lower time frame, you could see candle bodies closing through there. But I would not be surprised at okay, now as we look at it, this should be left open as a breakaway gap. This also should preferably be left open as a breakaway gap, but we'll say, okay, this one could be filled, but I don't like either really one of these being filled. I have no problem with it creating a gap here, touching the gap very, very slightly, and then leaving. I'm also watching how we're going to treat the first presentation gap. But to me, it's lining up perfectly for longs. And this is a good mental thing, right? Don't let the anticipation or the movement, this quick movement from 950 to whatever time it is, 958, be this. Don't let it control your thoughts and your emotions, okay? All right, it moves quickly. We sometimes just start all of our focus then goes to right here. That's all we're glued in on. Don't do that. Zoom out, switch your time frames if you need to, pull up a different chart. Wait a couple seconds. Let that feeling go by you. Now you can come back over here, see if that's is still there. Price action's still there. It's not gonna if it goes from here to here and it's every single green candle, there's no inefficiency filled, then so be it. Right? What's the worst that's gonna happen? I'm still gonna have 2 legs, I'm still gonna have 2 arms. There's no problem. Right? Let's just come back a different day and you get the entry a different day. But you can see how strong it is at this point, right? We're coming back in. You just get a wick here. That's the only reaction you get out of the inefficient section. And then displacement here, displacement here. You get a short-term high. That's another premium array. So you're going to watch how this is reacted to. And if it closes through there, you know, it's just going to send at that point. Where's 950? Okay. Let me turn this on, actually. And this is what I was talking about earlier in the stream with 950 being the first or the last kind of entry, right? Sometimes with how much volatility is put in the market right at 8:30 and even at 9:30, 950 macro is normally the last entry you want to be seeing towards the draw. In this case, if the draw is buy side, that's the last available time that it can form the swing low, right? So at this point, we just took out the opening range high right at what, 10 a.m. Here's your 10 a.m. news coming in. This is where time of day is extremely important. Someone who's one-dimensional, meaning just looking at price action, is going to see that low there at 951, see the high that I've marked out at buy side, and think that's the only range to ever exist today, and you're extremely glued in on that price action. Don't do that, right? It's in the beginning of trading, we have a very short-term mindset. We think that this trade is the only trade we need. We think that this execution is the only one that we need. It's going to dictate our entire career. When in reality, it's the complete opposite. It's the smallest thing that you do ever because you're going to take the same exact trade over and over and over again. But like I said, someone who's one-dimensional looks at this low and this high as the entire range. You think that we're 75% of the way up. That's fine. And you may be freaking out. You may be freaking out that it just left here and you didn't get an entry. Perfectly normal, number one. Perfectly normal. It's a fear of missing out. It's a fear of that you're not going to get an entry. It's a bunch of different fears that are flooding into your brain. The first action of self-discipline is self-awareness. So just be aware of those things. And I bring your attention to them because these are the same thoughts that I had. And as I see it moving, I know that someone else who's still learning will have those same exact thoughts. So just be aware of them and don't let them control you. Number two, going back to what I said, I keep deviating from what I was trying to say, but time also exists, okay? When we talk about our session, our static session between 9:30 and 11 o'clock, the low should be put in at what time? The high should be put in at what time? Okay, when you look at the time of day right now, and you look at what time it's supposed to be forming a high, even just of the session, not even of the day, but of the session, how much time do you have left to find an entry before that high is ran out? Right? There's no price constraint as how far it can go. Obviously, you have a deviation you could be using here, but you know, you shouldn't be worried if it tags that buy side, is that going to be over? Is it going to be it for the day? No, most likely not. Where's the week targeting? Buy side. Where's the day of today targeting? Buy side, higher. Session looks like it's moving higher. So now you got week, day, session all moving higher. Should it stop right at 10 o'clock when it tags this buy side and drop back down? Preferably not. It should go further in price. It should go further in time. So on this kind of day, especially when you have the week, the day, the session all pointing up, this is where you can find really, really low resistance runs. You can find multiple entries, and you should not be freaking out about it. If we were still stuck in this consolidation range down here, and I started seeing, okay, this buy side was current daily high, and it started running up here, I'd be slightly more worried because if it were to tag this buy side, you don't know what it's going to do after that, right? It could tag this and come back down into the consolidation range. Now that we've left the consolidation, you don't really have that constraint of scalping and of these short-term ranges, at least for me. So if it has to run up this high and it uses that as a breaker, I don't really care. I'd favor it coming back down and filling a gap and starting to leave that instead so I can get an entry below that buy side. But, you know, you look at the 930 open as well. Here's your 930 open. You can use that. You could use the 830 open as well. You can see it's wicking down right below that. So you may not get an entry below into the inefficiencies, right? You may just see a sisti here and a retrace, and that's it. All right, like this price action is pretty strong. It's going to take this high and it may just run. There's not even a 15-second inefficiency I can use. There's this tiny one here. Chops into it, spikes up. 15. And you still got, 5 minutes left in the macro time too. Mm-mm. 2-minute gap probably. Yep, there you go. Same thing. One-minute gap on it with 2-minute gap. So if it were to drop into that range, maybe it won't. It's using this 930 open pretty well. But I'd favor it drops into this gap, fills, you can maybe include this inefficiency too, but as you get lower and lower, these should be left open as breakaway gaps in here. Breakaways, right? I'll screenshot this really quickly. So at this point, it should tag into the gap. There you go. During the macro time. Nice. So we got a 5-minute gap here too, so it looks like it wants to reach into there. There you go, 5-minute gap filled. Below the 930 opening price. Here and here, 19. So at this point, you can be using, if you don't know how far it's going to dig into the gap, this is where you could be using like a retracement sisti entry, where instead of you getting in on the limit order, whatever, you wait for it to simply just leave the retracement leg, get another retracement leg, sisti, stop at the low of the retracement. If it gets reclaimed, that's just unfortunate, but that way, you don't have to get limited in here, put your stop all the way down here. Limited when it's starting to cross, you'll miss out on 20, 30 points, but then in replacement of that, you get a better stop loss. I prefer that over limiting in here, unless there's a clear order block it's tagging into, which between here and here, you have no black handle. You could be using the breaker, I guess, but even here, it's kind of weak. And in here, there's not a lot of clean price action that I can be using for that. So I rely more on a sisti entry if it wants to give me that. So like in the 15-second chart, you got a low, high, lower, low, digging into a gap. Or you can be marking the 5-minute gap. You can mark that out right in here. Boom. All right, let's just call that the inefficiency. So you got a sisti in here with this candle. Put 2 buy stops there on demo. Do not copy this. And that would be like, in this case, I'm risking that low instead of getting a limit order here or here on a 1 minute chart. There, there, or there, right? And then having my stop below the inefficiencies like there. You get a much wider stop, but in this case, I say much wider, it's 24 points, so it's not that high. But in this case, you're risking, you miss this move, but then you get a tighter stop. So the RR would be slightly higher. This candle is probably going to close. It's not going to take this buy stop yet. This candle is going to close, and I want to see how it closes relative to the gap. And I've marked out this section because this is the really inefficient section. I don't really want it to come down into consequent encroachment of the 5 minute gap. There's a lot of stuff on here. Let me see if I can clean it up. That 5 minute gap here, this lower section, right? Especially in here, like this section, you look to the left, that's efficient, right? So you mark out the full gap here to here, got consequent encroachment. The lower portion is pretty filled in terms of clean price action. So you don't really want to see the lower portion filled. I just want to see the upper portion. And then displacement out of it. That's the key thing. We got slow lethargic movement inside. Displacement out is going to be what shows it's still respecting a buy program. And obviously, same rules apply in here that I mentioned earlier about the right side of the curve. That's the SysD. And obviously, we see displacement not like that swing high and shoots up quickly. That could be another kind of shifter SysD that you could be using as tape reading, of course. All the things that I mentioned are not trades per se, right? It's more of just building a framework, right? So this displacement out, past the swing high on the right side, potential entry opportunity. Now it's tagging into this order block, which is still going to have some sort of discount retracement first. It's a premium array. But how far we retrace is going to be important. And obviously the speed we retrace off of is also just as important. So I'd favor if this low now is kept intact. We want to see how this low is treated. It should keep this low, start to just energetically run up. And obviously once it takes out really this high, it should start to just spool. So I'm watching for that. Put 3 on here. And to me, this is a pretty textbook setup for myself. Bias, time of day. We're slightly past the macro time, but like I said, you can squeeze out a silver bullet if needed. We had a very late reversal today, right, during the macro time, so I have no problem in getting in. It's still pretty early into the move. Still got at least 15, 30 minutes to when the expected high is forming. So plenty of time left in the expansion. Still haven't met the price target. Still haven't met the standard deviation target. So plenty of reason as to why I can keep running. And I'm staying on the 15-second chart because I'm just watching the order flow here. A little bit more important to me. So like I said, bearish order block there. You want to see how much it's retracing. Notice how it's staying in premium of that range. Okay. Get filled out there. Stop loss. Goes down first. You can go back to the 1 minute chart. Start to look for targets. Obviously, current daily high. Can sell one there. This is an easy partial. And then take profit. I don't know. Just jam it up here. Doesn't really matter. I'll watch time of day for that, but screenshot this, put it into the predictions chat. This is a demo trade. But see how now at this point, I wouldn't expect it really to drop any further into the inefficiencies. So I'm risking, in this case, a slightly worse entry for a tighter stop. And now you can see that this is actually now an intermediate term low. Intermediate term low. Okay, it's not going to work. Intermediate term low. Apparently doesn't want to work. Let me just type it in. I'm going to stop being lazy. ITL. Intermediate term low. So an even better stop placement. Yes, sir, Atlas. You already know. And to me, this is a textbook trade. So for me to lose on this, I'm perfectly fine with that. It is what it is. Bias, bullish. See a nice drop down coming into the market. Open low, macro time reverses, expands up. 5 minutes SD, 1 minute entry in a fair value gap. In this case, I'm not taking the entry in the gap. I'm taking slightly after. ATM model to the T. So it can hover around a little bit here, but since we already had that the 15-second SSD, we should start to see displacement. If we don't see displacement, it starts to hover around in here and even approach that swing low. I put up the rejection block, I see. Yep, exactly. 1 minute IFG as well. And there's not really, I mean, you could normally do a nice fair projection from this 15-minute buy curve here, but there's not really a good last manipulation leg. So I'm not gonna just draw it out from nothing. TradingView is really laggy today. Do I have my hardware acceleration on or something? Settings. Hardware. Nope. Excel. Nope, I don't. I don't know what's going on then. I have one Chrome tab open. So you can see the candle bodies there respecting the 1 minute inversion gap. I'm going to clean this chart up a little bit. Things that are important to me. That's a better, right? So at this point, if this price actually takes out the swing high here, and really this swing high here, I could trim it to that low. Inside a daily volume bounce, so that's probably why. So I'm watching right now. Do we get displacement, energetic displacement past this point? And obviously this point. You look at over here to the left. Why are we retracing? Got an inefficiency right here. Okay, so this is another inversion gap that we're going to have to come through. And this is really a speed bump in price action. Right? Speed bump. There's not really any speed bumps past that. You got the 830 data high. That's not going to be a major problem, but look how we should. But notice obviously the wicks are in here. The wicks. So it's all inefficient. We can keep doing this signature in here as many times as we want until it closes past. And really until we have a down closing candle within this range. That's more important than the up closing candle range. But you just got to see. So we're taking out that swing high first. Boom, right there. Took it out. Now, a very aggressive trim would be to here or even to the inversion for value gap. I'm not going to do that here. I'm going to wait until at least this swing high is taken to like trim to there. Just with the price action we're given. Target -2. There we go. Oh, what higher targets do I see? It would be on a higher time frame, like 4 hour plus. But right now, highest target I see is the -2 for the last manipulation leg. And then Atlas, if you want to pull the -1 of the opening range, right there, this would also be a standard deviation target. But both of these are obviously deviations. So them in itself mean nothing, as we know. We need them to line up with the price action target. So as we get so at this point, since we're on the right side of the curve of this large monthly buy model, you need to go back to NQ to find any targets. So you look at the daily chart here. I mean, you've got this swing high. It's a daily high. That counts. That's a premium array. Do I think that's going to be a good target in terms of, oh, we're going to tag that and come back lower? Probably not. We're going to go for that one. But past where we are, inefficiency, we traded through. That's the next target in terms of daily chart. 4-hour chart probably could refine that more. But then I got to go back over here. You can see same thing, right? Like all of this is relatively equal. So the swing high up here is also reasonable. But yeah, what is this like at 22,668.5? So what you could do is put an alarm over here. And drag it down 2268, like one tick below. And then it runs up over there if it wants to. That's the first target. You can see how far it is, right? Still a good 100 points. That's not that far. So at this point in time, I want to say leave the consolidation. We're approaching 1030. We should start to see it energetically run. ES probably is, there you go. ES starting to spike up. YM starting to come up. So everything's starting to move in tandem. You can see how clean of a buy model this is. Beautiful. And we still have not seen our second stage of distribution either, right? So run here, retrace, leave. You want to see this be used as an inversion. It's a future inversion for value gap. So finally a healthy candle above this range. We're still stuck within this IFEG. So you're just watching it. I'm down to a 15-second chart. Finally got some inefficiencies forming. Got one in here. What's DXY doing? I need this boy to move down. Add alert. There we go. There we go. So it's starting to run out that high I was talking about there. So I can trim my stop, at least to that swing high. And you can see the IFEG should now be used as an actual IFEG. Over here, it's being used as a sibi, closes through. If it can close through, then it should be bouncing back on top of it. Now, since I have such a close entry to the exit here, it's going to be quite hard for me to trim my stop to break even. If I trim my stop to break even in this case, it is very likely that it tags this high, comes back into a short-term dealer range discount, stops me out, and then comes back up. So I either have to leave it at this swing low, or I can maybe trim it to there at the most, but I don't really have a high inclination to trim it immediately after it runs this first take profit, because to me this is kind of a no-brainer take profit. And it's obviously kind of just a 1-to-1. So, and obviously, like I said, the proximity of it itself to me is I'm likely to get stopped out. So I want to see it. If it can start to move higher, like up into here, and close past this buy side, then I can move to break even. If it doesn't do that, it starts wicking this, then we'll see how it goes. I just want to see the order flow. That's all I really care about. Gap here, not in an efficiency, but just a gap. More interested in the order block rather. That is touching here. OB. Candle body staying within the IFVG. Look, tempted to buy another one in here. Let's drop this down to 1. Yep, I like that. Little immediate rebalance there. Leaving this a little bit open. So that'll be my last part, last little entry there. Long stall. By the way, the breaker standard deviation -2 is close to the 15-minute unmitigated sibi on the left side of the higher time frame curve. Oh, okay. Oh, you're pulling it from where are you pulling it from though? You're pulling it from a weird area. 10 o'clock to 10:30 consolidation on 8:30 news. I'm quite bored from this price action. And seeing the candle buys though. Look at that. Now I mentioned, okay, this is the first stage, and you haven't seen the second stage. One could argue right here, this is the second stage. Order block inefficiency trading into it during the silver bullet time. You could argue that is. It's not as clean as you'd like it to be, but it's still, I guess it counts. It's not really a good mitigation. I know. I'm right there with you. I just want this order to freaking fill so I can move it and be done. Like, just stop me out. Go to TP. I don't care. Or move or do something. Where's that one? Where's that one meme with a guy poking it? Do something. Yeah, this one. Yeah. Opening range, JKX opening range, and -2 up there. I'm not seeing enough movement. What a time we live in. I'm joking about candles moving on a screen so we can get our gas money. Yeah, that's the way it's consolidating below this to me makes it seem like they're gonna fling it right through and close through. So yeah, so I want to see how the current daily high is. If it wicks it out, starts coming back, I'm gonna close it out probably. So I just want to see it. I would leave it right now, but I don't I want to. This is one of those trades I just want to manage. Like it's stalling out so much in this. You see, ES is moving, Nasdaq is, YM is moving. Well, Nasdaq, ES and YM are both moving. Nasdaq is not. And you see, candlelights are all closing within there. You got this. It's just in this consolidation range. It was just faking up, down, up, down, up, down, with speed. Okay. Nope. Prank after prank. It looks like it wants to leave, and then it doesn't. Then it looks like it, then it doesn't. That's why you don't trade in consolidations. Now, this actually is an intermediate term low as well. You got a gap being filled with a short-term low after it, and another short-term low. So I could actually trim it to there. I know, this exactly looks like first stage to me. That's what I was saying. I don't really think that's a good second stage, although it's within silver bullet time. It just doesn't look like it's... But the first stage happening this high up in the move, oh, that's, you know, you think about the market maker, like symmetry, second half. There you go. Finally, thank the Lord. My goodness. You know what I'm talking about? Where like if this is the first stage, that's normally 50% of the range. Boom. That's lining up for the -2 nicely. At what time? Yeah, I know, right? That's what I'm talking about. Time of day, baby. Bro, if someone banned this guy, who gave this guy mod? It's gotta be random, right? 10:30 on the dot, forming the new high of the session. Now it's gotta just continue. The movement at 10:30 is great, but if I don't get filled out, I'm just kidding. It should. It's pretty. It's finally leaving this IVG. It's starting to pump up right at time. Wow. It's not gonna fill me out, is it? Thank you. Giga Chad candles, baby. Okay, so this is the speed I was looking for. If I can move it on the to break even. So I don't want to see it, like I said, I don't want to see it wick, and then come back down. Then I'll have to keep my stop there. But this is the exact speed we were just looking for, and it gives it to us right on the dot. Yeah, I'm keeping those there. It's fine. Now, rest of it is free trade. Oh yeah, time of day is you can't time the market. I think it's kind of random. Yes, sir, Dr. Barber. You hit the 10K goal? Actually, I pushed it to 3 million goal for the day. I'm just joking with you. You always killing it. I'm just a simple man. Yes, sir. Top step hit goal pre-market. Love it. Oh no, I saw that swing. That swing from post tariffs. Craziness. God is good. All the time. Yes, sir, Ty Wags. Is that the one you've been working on? The after you made the model? No, Ty Wags. Yes, sir. Love it. Good work, my man. That's great. All that hard work paying off. What is it? 2 weeks? Take you 2 weeks? 1 week? 3 weeks? I don't even know. I lost count. Three weeks. Perfect. Wow, what happened? What happened to the old one? What happened to the old one? Please, don't do me like that. Full T, yeah, full TP or break even. Yeah. So to come back to here, I want this to be smacked. I'm also looking for later in the day. You know, you look at the time of day we formed this low at. We just formed it here during the session at 10 a.m. Anyone knows anything about DOT? Where does that push you to? And if it comes back in, and at this point, this IFEG here, the reasoning for the stop trim, this IFEG, as we saw, has been traded through multiple times. It should be efficiently filled. There's no reason for it to come back down unless it wants to hunt stops. If it's hunting stops, I'm going to get stopped out. So I want order flow to hold. It doesn't look like it really wants to displace through, so I may be cooked off of a one partial, and that's it. But let's see. But yeah, based on the reasoning behind why I think it's going to go up to here is obviously time of day. The weekday session, all those drawn liquidities are higher, as well as the fact that if you look at standardly, the first stage of reaccumulation, basically this consolidation that happens in a market maker model in stages, you'll have, it looks like this. This first stage of reaccumulation normally happens around 50% of the implied dealing range. So if it's happening this high up, well, then we can just eyeball it and just look at, okay, if here's the starting point, here's the 50%, you know, that puts us higher up towards especially the -2 and then the -1. So this is where you'd want to see speed. You'd want to see at least this order block touched and leave, but I don't even want to see that. I want to see the breakaway gaps, and it's not leaving any breakaway gaps. So I maybe stopped out here, and it is what it is. Entered with 51 contracts. Oh my goodness. Yeah, that sucks. I've done that before. I literally, like, you know, you try and get on the micros and you're on the mini chart. You get in, you're like, why is my P&L moving so quick? And then you realize, and then within 2 seconds, you're like down. Yeah. That mistake now will creep in like once in a while, and I start freaking out. Because like that's just one of those things you can't really plan for. You just got to do it. You just got to close out. But question: if you in drawdown, you only have $300 left of your PA account, would you cancel the subscription on your 500K account with Apex? Like there's $300 until you hit max drawdown, or there's $300 left in profit. And then do you pay? So it's like $300 left until you hit your max drawdown. If there's no monthly fee, obviously in demo, hypothetically, this is not financial advice. If there's no monthly fee, I don't think there's any point in canceling it. Because I mean, you might as well just see what you can do with it. If there's a monthly fee and you feel like, yeah, I'm not gonna, I don't think I'm gonna do well in this. You know, I don't want to say to cancel. It's really, oh, okay. So there is a monthly fee. So yeah, if you feel like you're stuck in a hole, don't obviously you shouldn't have that mentality. You can climb out of it for sure, 100%. So I'm not gonna say to just close it. I really do think that it's savable. Number one, if you just manage your risk, you take some really good trades out of it, but 100% it's savable. It's just, would you rather pay the monthly fee and continue that account, or do you think that you can just take that monthly monthly fee and make a new account, pass that account, and get back to a healthier drawdown limit? That's not like that. And if you can do that in less time, then there you go. If it takes the same amount of time, it takes longer to do that, then you might as well just keep the PA account, slowly grind it. If you have to trade it with one micro, you know, that may be the solution. But just write it down. Write out a pros and cons list and figure it out. That's something that's worth your time. If it's not worth your time and your money, then um, you can leave it. There's no either way you do it, it's not going to be the end of the world. We tend to think those evaluations and all those fees and everything is like, especially when it's one of the major expenses that we have, is like everything. I promise you, within 2 months, your life can change super quick. So don't spend too much time and stress and everything on evaluations and trading and everything. Focus more on the skill, becoming a good trader, doing the best you can in that aspect, and those evals will fly through, right? It's you could pass them in 2 days type of thing. So just do the diligent work behind the scenes in your room when it's dark and you got no evals and you're just staying up late doing all that stuff. That'll pay off. Don't rush the evals. Don't rush the fundeds and things like that. That's just going to make it take longer. You're going to do a lot of psychological damage to yourself. You're going to do a lot of technical damage to yourself as well, because you're going to start learning things the wrong way. So as much as you can avoid that kind of, it's a very rocky road to go down. As much as you can avoid that, you want to. Like you could take 6 months off, and by the time you come back, you should be in a way better position than you were at the start. So I got stopped out. Oh, why did it not fill it? Oh, that meant Q it filled it. Okay. Let's try to get stopped out here. I meant Q it filled me out, and then unQ it didn't. Got that weird wick. If I'm an order block flinging this or not. That's a pretty weak one. All right, so I mean, I could come in here and take last ditch macro, but I'm not too concerned with it. I think this is fine. I wonder if that actually took out the loss from yesterday. No. So this is tiny loss, but tiny win as well. Took partials, yeah. So I mean, I could come in this, and you could maybe look and study the last ditch macro here in about 8 minutes, see how that's traded. I still do think it's going to go up towards those targets. It's just a very slow grind type of day. Can't really deal a whole lot with that. So we'll wrap it there. Overall, I mean, directionally, bias wise, everything was right. It was just sort of price action is just hard to deal with. Stop placement and obviously everything associated, entries, everything. So a little tiny scalp here. I got stopped out in the runners. Maybe it is my fault. And if it just tags into this IPG and leaves, then it definitely is my fault for trimming the stop too tightly, which I can learn from. So helps me build a better edge. I don't really care. At the end of the day, I'm gonna get better out of it. So hopefully it was helpful for you. I'm gonna post this recording up. I'm gonna try and do it immediately because I've got some other stuff I got to do, but it's been taking a while for them to render. So obviously, if you got any questions, give a nasty psych advice on the go. If you can't control your mind will control you. That's a great, I don't know who said it first, but it's the greatest psychology quote I think that you could find. So true. But anyways, yeah, I'm gonna wrap this up. Looks like we're dropping back inside the range. So yeah, I got about 30 DMs to answer. I'll try and answer those all today. If I don't get to you today, I'll try and get to you tomorrow. I apologize. In the meantime, Zeno, if you're in here, I'll send you your recording as well. And then this recording will also be posted up on YouTube soon. Sound good? So be safe, journal, do the things that are necessary to succeed. Don't come in here and revenge trade because you got stopped out. Be smart. All right. And I'll talk to you guys soon. Peace.